Today is January 25th, 2026. Warren Buffett, the man who told you to be greedy when others are fearful, just did the most fearful thing in his entire career. He just sold $140 billion worth of stocks at a time when the market is hitting all-time highs. This isn't profit-taking. This isn't portfolio rebalancing. This is an escape. He's sending a silent, terrifying message to those who know how to read it. A black swan is coming, and this one could make your retirement savings vanish overnight. The oracle has spoken. The question is, are you listening? In this video, I'm not going to tell you what CNBC or the Wall Street Journal is telling you. They'll give you technical reasons. They'll say he's being cautious. They're missing the point entirely. We're going to decode the three hidden messages behind Buffett's move. First, we'll unlock the mystery of the $140 billion cash pile and reveal what Buffett is actually waiting for. Second, I'll show you the three black swans that Buffett sees coming in 2026, catastrophic events that could destroy the system as we know it. And third, we'll follow the smart money. I'll give you the exact action plan to protect your wealth the same way Buffett is protecting his. Because this isn't just about stocks. This is about survival. And Buffett just showed you his survival strategy. Let me decode it for you. So here's the first question. Why would anyone sit on $140 billion in cash? Cash loses value to inflation. Every year, it buys less. It's the worst performing asset class in history during inflationary periods. So why is the greatest investor of all time hoarding cash instead of deploying it? The mainstream narrative says he's waiting to buy undervalued companies. That's a lie. The truth is far more disturbing. Warren Buffett has enough cash to buy entire countries. He could acquire the 10 largest companies in the S&P 500 tomorrow if he wanted. But he's not buying. He's waiting. Waiting for what? A crash. When the market is on fire, when companies are collapsing, when panic is everywhere, cash isn't trash. Cash is king. In a crash, you can buy 10 worth of assets for one. You can acquire world-class companies at bankruptcy prices. You can restructure entire industries. Buffett isn't making a profit right now. He's positioning for the greatest buying opportunity of his lifetime. And here's what that tells you. He's not preparing for a correction. He's not preparing for a bear market. He's preparing for a depression, one we haven't seen in our lifetimes. Let me break down the numbers that prove this. In Q4 2025, Berkshire Hathaway's cash and treasury holdings hit an all-time record of $325 billion. That's up from $157 billion just 18 months earlier. He's doubled his cash position in a year and a half, while the S&P 500 gained 28%. Think about that. The market went up 28%, and Buffett sat out. He watched everyone else get rich on paper while he accumulated dry powder. Why? Because he knows something they don't. He knows that bull markets make you feel rich, crashes make you actually rich, and he's preparing for a crash so severe that $140 billion will be enough to buy America when it is on sale. So to recap, Buffett isn't buying stocks because he's hoarding cash for the crash. But what exactly is he afraid of? What does he see that we don't? Let me show you the three black swan events that Warren Buffett is bracing for. Events so catastrophic that they could trigger a systemic collapse. Black swan number one, the U.S. debt bomb. The United States government is carrying $35.8 trillion in national debt as of January 2026. But here's what most people miss. The interest payments on that debt are now $1.6 trillion annually. That's more than the entire defense budget, more than Medicare, more than Social Security. And interest rates are still elevated. The 10-year Treasury yield is sitting at 5.64%. That's triple what it was in 2020. Every percentage point increase in rates adds $350 billion to annual interest costs. Do the math. If rates stay here or go higher, the U.S. government will spend $2 trillion per year just on interest by 2028. That's unsustainable, mathematically impossible. So what happens? Either the Fed has to print trillions to buy bonds and suppress rates, which triggers hyperinflation, or they let rates rise, which triggers a debt default. Either way, the system breaks. And Buffett knows it. That's why he's holding $189 billion in U.S. Treasuries, short-term bills that mature in months, not years. He's not locking up his money long-term because he doesn't trust the government's ability to pay. Black swan number two, the commodity. Super spike silver just crossed $103 per ounce. Gold is at $2,847. Oil spiked to $94 per barrel this week. This isn't normal market volatility. This is a currency collapse disguised as a commodity rally. When commodities explode in price, it destroys corporate profit margins. Companies can't pass all the costs to consumers, so their earnings collapse. And when earnings collapse, stock prices follow. Buffett lived through the 1970s stagflation. He watched the Dow Jones go nowhere for a decade while inflation destroyed purchasing power. He knows what commodity super spikes do to equity markets. They crush them. And this time it's worse. Because in the 1970s, America still had manufacturing, we still produced oil, we still mined our own resources. Now we import 70% of strategic minerals. We're dependent on China for rare earths, we're vulnerable to energy blackmail from hostile nations. So when commodities spike, we can't just increase domestic production. We have to pay whatever price the suppliers demand. That's an inflationary death spiral, and Buffett is getting out of stocks before it destroys them. Black Swan under number 3, the resource war. This is the one that terrifies me most, and I think it's the one Buffett fears too. On January 1st, 2026, China banned silver exports. On January 20th, Trump imposed 25% tariffs on Europe to force a Greenland acquisition. This isn't trade policy. This is war, not a shooting war, a resource war, a fight for control of the materials that power modern civilization. Silver, rare earths, lithium, cobalt, uranium. Whoever controls these resources controls the future. And right now, China controls most of them, so America is scrambling, threatening allies, starting trade wars, trying to seize control of Greenland's mineral wealth. And when wars start, even economic ones, stock markets collapse. In 1973, when the oil embargo hit, the S&P 500 dropped 48% in 18 months. In 1990, when Iraq invaded Kuwait, markets crashed 21% in 3 months. Resource wars destroy investor confidence, they trigger recessions, they cause stagflation, and Buffett sees one coming. That's why he's selling stocks and hoarding cash. We've covered the 3 black swans: debt bomb, commodity spike, resource war. Now let me show you the one indicator that proves Buffett is right. If you're still not convinced, let me show you the one chart Warren Buffett calls the single best measure of market valuation. It's called the Buffett Indicator. Here's how it works. You take the total market capitalization of all U.S. stocks. You divide it by U.S. GDP, the total size of the economy. When that ratio is below 100%, the market is fairly valued or undervalued. When it's above 150%, you're in bubble territory. And when it crosses 200%, you're in extreme danger. Want to know where we are right now in January 2026? 217%. The highest level in recorded history. Higher than the dot-com bubble peak in 2000, 181%. Higher than the 2008 housing bubble, 110%. Higher than any point in 2021 during the pandemic meme stock mania, 213%. A 217% means the stock market is worth more than double the entire U.S. economy. Think about how insane that is. Companies are valued at prices that assume they'll generate profits that exceed the entire GDP of the country. It's mathematically impossible. And every time the Buffett indicator has crossed 150%, a crash followed. In 2000, it hit 181%. The Nasdaq crashed 78% over the next 2 years. In 2008, it hit 110%. The S&P 500 dropped 57%. In 2021, it hit 213%. We got a 25% correction in 2022. Now we're at 217%. And Buffett just sold $140 billion in stocks. Do you really think that's a coincidence? He invented this indicator. He trusts it more than any other metric. And it's screaming, "Get out!" So he did. The Buffett indicator confirms we're in the biggest bubble in history. But Buffett isn't just selling, he's quietly buying something else. Let me reveal what. But here's what the mainstream media isn't telling you. Buffett isn't just selling stocks and sitting in cash. He's quietly positioning in an asset class that's been underground for 100 years. He's not buying gold bars. He's not buying silver coins. He's too smart for that. He's buying companies that extract real assets from the ground. Let me show you his moves. Position number 1, Barrick Gold. In Q3 2025, Berkshire Hathaway took a $565 million stake in Barrick Gold, one of the world's largest gold mining companies. Why does this matter? If gold goes from $2,847 to $4,000 per ounce, Barrick's stock doesn't go up 40%. It goes up 300% to 400%. Because mining companies have leveraged exposure to commodity prices, their profit margins explode when prices rise. Buffett gets the upside of gold without having to store physical metal. He gets equity returns on a hard asset. Position number 2, Occidental Petroleum Berkshire now owns 27% of Occidental Petroleum, an oil and gas company with massive land holdings. But here's the kicker. Occidental doesn't just have oil, they have land. Tens of thousands of acres in Texas, New Mexico, and other mineral-rich states. When the dollar collapses, when paper assets evaporate, land will be the ultimate store of value. Buffett is buying oil production and real estate in one move. Position number 3, Freeport-McMoRan, rumored. There are unconfirmed reports that Berkshire has been accumulating shares in Freeport-McMoRan, the world's largest publicly traded copper producer. Why copper? Because every EV, every solar panel, every AI data center requires massive amounts of copper. Demand is exploding. Supply is stagnant, and copper prices are about to go parabolic. If this position is confirmed in the next 13F filing, it will prove that Buffett is all in on the commodity supercycle. So here's his strategy in plain English. Sell overvalued paper stocks. Hoard cash. Buy companies that own real physical assets: gold, oil, copper, land. When the crash comes, the stocks will be worth nothing, but the commodities will be worth everything, and Buffett will own the companies that produce them. Buffett is selling stocks and buying real asset producers. Now let me give you the action plan to do the same on your scale. So what can you learn from Buffett's strategy? How do you protect yourself from the Black Swans? Here are the 3 actions you must take immediately. Action number 1, reduce your stock exposure. If 80% of your portfolio is in stocks, you're overexposed. Reduce it to 50% or less. Sell the speculative positions. Sell the meme stocks. Sell the companies with no earnings and sky-high valuations. Keep only the highest quality companies with strong balance sheets, low debt, and real cash flow. And be prepared to sell even those if the Buffett Indicator keeps rising. Action number 2, build your cash reserve. You need liquid cash to survive a crash and capitalize on opportunities. Aim for 6 to 12 months of living expenses in cash, not in a money market fund, not in a brokerage account. Physical cash at home or in a safe deposit box, though we've discussed the risks there. When the crash comes, when banks freeze accounts, when credit cards stop working, cash will be the only thing that works. And when assets are being sold at fire sale prices, cash will let you buy the dip like Buffett will. Action number 3, shift to real assets. Allocate at least 10% to 20% of your portfolio to physical gold and silver. Not ETFs, not mining stocks. Physical metal in your possession. This is your insurance policy. When currencies collapse, when digital systems fail, when trust evaporates, gold and silver will hold value. And if you want leveraged exposure like Buffett, consider adding mining stocks as a small speculative position. Companies like Barrick Gold, Newmont, or Wheaton Precious Metals. But physical comes first, always. These 3 actions, reduce stocks, build cash, buy real assets, are exactly what Buffett is doing at a billion-dollar scale. You can do the same at your scale. Let me close with this. This isn't just an investment strategy. This is a survival strategy. Warren Buffett, the eternal optimist, the man who has bet on America for 70 years, is preparing like a doomsday prepper for the first time in his life. That should tell you everything you need to know. He's not selling stocks because he thinks they're slightly overvalued. He's selling because he sees a once-in-a-century collapse coming. And he's hoarding cash so that when the dust settles, when companies are bankrupt, when assets are being liquidated, he can buy America at pennies on the dollar, just like he did in 2008, just like he did in the 1970s, just like he's done in every crisis. The difference is, this time the crisis will be bigger than anything we've seen before. So here's my question for you. Do you think Buffett's move is a safe play or panic selling? Are you following his lead or are you staying fully invested? What percentage of your portfolio is in cash right now? Drop your answers in the comments. Let's see where this community stands. And if you want to know the 3 specific mining companies Buffett is rumored to be accumulating, subscribe to this channel. That's our next deep dive video. Because the oracle has spoken. He's shown you his hand. He's revealed his strategy. The only question is, are you smart enough to follow it? The Black Swan is coming. Buffett is ready. Are you?